Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning, everyone. Welcome to Financial Issues. Wonderful to be here with you today. I appreciate each of you joining us. Seth Udinsky here with you, as well as the Studio A team, including my friend Samuel Case. Sam, ready for some fun again, brother?
Oh, yeah. It's National Cheesecake Day, so this is very exciting.
That's awesome. I was never privy to cheesecake at much. I always thought cheese was good and cake was good, but you put them together and it wasn't as good. But I'm sure there are a lot of people out there who like cheese.
I think the bigger question, is it a cake or a pie?
Yeah.
These are the questions we ask on Cheesecake Day.
Exactly right. Wonderful to be here with you, folks. Thank you, all of you, for joining us today. Busy show today. Later on, I'm going to have financial advisor Bob Barber. He's going to join me to analyze the characteristics of an orderly financial household. Not ordinary, but an orderly financial household. Stay tuned, folks. If you got questions, we'll have some time at the end to address some of those. I know the last time we had Bob on, we had several questions from what we had said, so I'm leaving some time at the end to answer any questions if you have them. Also, a whole lot of people are still afraid of investing. We'll see why and perhaps some of the strategies to overcome that fear. Of course, your comments and questions throughout the show, we want to be able to answer them as best we can. Meanwhile, the Trump administration is doubling down on this August 1st tariff deadline while the markets await today's big ticket items. We got a big day today, folks. We have the Federal Reserve interest rate decision for July. Of course, that's the meeting that we're all waiting with bated breath to see what the Fed will do, coming down from Mount Sinai, as it were. We also get earnings from Meta and Microsoft today. So a lot to keep an eye on, especially as it pertains to the markets. But partners, I just want to let you all know, please do act on the recent sell alert that we issued for Tesla. We did issue that sell alert. This is a big one, obviously. I would urge you, please refer to that sell alert and today's commentary as well for more information on that. Of course, it's always a bummer to have to sell companies like that, especially one as big as that. But this, of course, is for biblically responsible reasons. So check out that sell alert today and make sure that you do your due diligence there. I'm sure Shannon will be talking more about this when she's on later this week. One of the big news items we got out this morning, folks, was GDP for quarter two. It actually grew 3%. That was better than expected. Sam, I got a huge kick out of CNBC's headline this morning because we've been seeing this constantly. But here's what they said.
Was it something like GDP grows despite how terrible and awful and no good Donald Trump is?
Basically that. It was basically that. Here's what they actually said. It said, quote, U.S. economy grew at a 3% rate in quarter two, better than expected pace, even as Trump's tariffs hit. CNBC just can't help themselves. They're just waiting, praying, Sam, that the tariffs would cause something bad to happen. And every time they cause something good to happen, it's like, well, here's another good thing. Despite those tariffs, trust us, folks, they're going to start causing bad things to happen. The lefties are praying for any kind of bad sign, Sam, and it's delightful when they don't get it.
Well, it's amazing. Yeah. Bill Maher, the left-wing comedian, the other day he came out and he said, I'm gonna bite the bullet here. I thought the tariffs were going to be the end of the world. Yeah. I believed all the economists who were saying so. And to be honest, it looks like I'm wrong.
Yeah, absolutely.
I'd say, good for you, Bill.
Yeah, that's exactly right. At least he's honest. So, yeah, we did get GDP out this morning, folks, for quarter two. Again, it grew 3%, better than expected. So, much to the chagrin of the folks over at CNBC and other liberal news outlets.
What's amazing about CNBC is when Trump was first elected, they loved him. And that is until he started to announce the tariffs.
Yeah,
so
that's exactly
how the
right.
Turntables turns.
Amen, brother. Well, let's move to the markets here, folks. Yesterday, major indices retreated from the record highs on Tuesday. Investors, they're really just awaiting these two busy days. So, today and tomorrow, a couple of big ones. By midday yesterday, the averages were down. The Dow Jones led the way down. By afternoon, it was much the same. They finished moderately negative. The bleeding wasn't too bad. The Dow Jones was down less than 0.5%. The S&P 500 down less than 1/3, and the NASDAQ down less than 0.2%. Pre-markets this morning are all pretty muted right now, slightly positive. Dow Jones is trending to open right at the flat line, S&P slightly above, and the NASDAQ slightly above where the S&P is. So they're just waiting with bated breath to see what Lord Father Jerome Powell will have to say when he descends down Mount Federal Reserve.
I see the anticipation. The prediction is about 98% right now that things are going to be exactly the same.
It'll stay exactly the same. That's absolutely right. So right now, the markets seem somewhat calm in that regard because perhaps they're expecting things to stay the same. But at any rate, that breaks at 2 o'clock
If
Eastern
you have
today,
no
folks.
Expectations, you can't be disappointed.
That's exactly right.
Very stoic.
That's right. It's a good way to look at the Federal Reserve. If you just lower your expectations really low, almost to where they're nothing, then you could still be disappointed, but there's a chance that you won't be disappointed. Well, Sam, let's get to a couple headlines here. Howard Lutnick has been saying that these trade deals need to get done by Friday. That August 1st tariff deadline is really hard and fast here. What can you tell us about this?
In fact, I think he says they will be done by Friday, and Donald Trump is saying there's going to be no extensions. Commerce Secretary Howard Lutnick said the trade deals will all be wrapped up with the rest of the world by Friday, though we did say a deal with China in particular will take a bit longer. No shocker there. Friday, of course, is the deadline before Trump's tariffs come back online for all the countries that have not made a deal, with Trump saying that rate is going to be somewhere between 15 and 20%, something we talked about on the show quite a bit. What you might not know, though, is this comes as the United States has brought in a record $150 billion in tariff revenue this year, including $28 billion this month alone. We're not even done with the month, and we've still brought in $28 billion. Treasury Secretary Scott Bessent estimates tariff revenue could break $300 billion this year. That's a hefty chunk of change, but it's not entirely peaches and cream, as Procter & Gamble, maker of common household products like Crest toothpaste and Charmin toilet paper, they said on Tuesday is on about a quarter of its products next month, at least in part because of those tariffs.
Yeah, I'm sure Procter & Gamble was just delighted to be able to put the blame on Trump once again. I don't know if you know this, folks, but Procter & Gamble was pretty infamous in the last several years for running these just really weird woke ads. There was a bit on the Michael Knowles show, Sam, a couple of years ago, where he would watch these advertisements and he'd have to guess what company it was. And it was always Procter & Gamble. They were always the woke ones. And it's so funny that seems to happen. But
I actually didn't know that. But then again, they own just about everything. Yeah. So maybe that shouldn't surprise me.
Absolutely. So, I'm pumped to see what these trade deals will come about as they get wrapped up on Friday, Lord willing. And folks, just keep in mind here, the goal is American greatness on the world stage. And I do have confidence that we will achieve that. I'm more than okay with that. Sam, there was another headline that I found kind of interesting here, that the Senate is introducing this tariff rebate bill. Can you tell us about this one? What's going on with it?
Yes, I can. Well, in light of all that money coming in, Republican Senator Josh Hawley, he introduced a bill on Monday that would send a rebate check directly from that tariff revenue. So they're saying, we have so much money coming in, let's give some of it to the American people. According to CNBC, that bill would provide at least $600 per adult and dependent child, or $2,400 for a family of four. That could be actually higher depending on revenue levels from the tariffs. This comes as President Donald Trump floated the idea on Friday, though he said tariff revenue should ultimately be mostly spent on paying down the national debt. Here is Trump talking about that on Friday.
We have so much money coming in, we're thinking about a little rebate, but the big thing we want to do is pay down debt. But we're thinking about a rebate. That's a very good question. You just made a lot of news. We're thinking about a rebate because we have so much money coming in from tariffs that a little rebate for people of a certain income level might be very nice.
Well, there you go, Seth. Listen, I'm not going to say no to $600. I like $600,
Sure.
But what do you think? Is this a good idea?
Yeah, I'm with you, man. Look, if they're forcing me to take it, I'll take it. I was delighted to hear President Trump say that the bulk of this money is going to be used to pay down the debt. I was bummed that he floated the idea that some of it might be given in rebates. I would prefer that all of it be given to float down the debt. I'll pass up on $2,400 or however much it'll be.
If my math is right, I'm not sure if it is. I'm not the best math guy, but I think if they actually went through with this, it'd be something like, I don't know, a quarter of the revenue brought in from tariffs would have to go to these rebate checks, which I just don't know if it's worth it.
Absolutely, man. I completely agree. And Sam, this does bring to mind for me, we've seen this now several times in the last 5 years. First, you had the COVID stimulus checks, and then there was also the Doge
Which didn't end up happening, but that got people excited.
Absolutely. Man, folks, people get so excited when the government says, hey, here, we'll give you free money. I totally understand. This is not taxpayer money per se. This is tariff money. My hope and prayer is that it would replace taxpayer money, but that's probably not going to happen. But still, we have a serious national debt problem in this country. I would love to see the Trump administration, which has proven to be far more fiscally responsible than the previous administration for sure. I would love to see all of this money being used to bring that down.
Right. With the DOGE rebate, the idea was like, listen, the government's wasted some of your taxpayer money. Maybe you should deserve some back.
Maybe get some of it back.
I kind of still disagree with that, but at least there's an argument there. This is not really related to taxpayer money at all. It's revenue coming in from other countries.
Exactly.
So I think it should be used for the debt. But if you disagree, let us know. We'd love to have that conversation.
And again, look, if someone says, hey, your government is forcing you to accept this $2,400 check.
All right, fine. I'll do it if I have to.
I mean, my goodness. But I would rather that not be where it goes. I'd rather it go to paying down that national debt, which I think would really help our nation in the long run. So anyway, we'll have to see what goes there, folks, but a lot of interesting stuff nonetheless. All right, coming back in this next segment, we'll talk about the fear of investing. Chat, let me know your greatest fears, by the way, before you started investing and how you overcame those. We'll talk about that on the other side of this break. More financial issues right after this.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay, or to go, to remain the same, or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Hi, Robert. You're live on Financial Issues.
I appreciate all that you and Seth and all the staff do for helping us.
Thank you, brother.
I would never have done anything like this without you guys being such a help.
My husband and I were talking yesterday, and I said it's kind of fun, to get in there and work your portfolio, and we're up in our entire portfolio. So keep up the good work, guys.
Invest without compromise. Go to financialissues.org to get started today.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shanna are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Folks, to take the tariff rebate bill or not, that is the question. Sam, we were talking in the break there about the social media metaphor that we've been seeing making the rounds on Twitter, especially about there being two wolves inside of you. What are the two wolves in this situation?
Inside me, there are two wolves. Yeah. One really wants $600, and the other wolf, he might be winning out right now. He really doesn't want his grandchildren and great-grandchildren to be in a national crisis because of the debt.
I'm with you.
That one wolf
100%.
Also keeps growling and saying, but it is $600 for you.
Listen, and me, I got a family of 5. $2,400 could get me a vacation.
I don't have grandkids. What do I care about them?
Better yet, that money could be invested. Like all that, so Yeah, it's tricky stuff, folks. Lisa saying you prefer the money. I get it, totally. Dave and Darlene saying pay off the debt. I get that as well. George saying, Seth, how about we get all the money confiscated by the government, pay off the debt, and take a much larger check than $600.
That is
George,
what we call a pro-gamer
so
move.
that's the third wolf that eats the other two, and that's
like a lion or a tiger. Wow.
Absolutely.
Yeah. Lisa also makes a good point. She says, the government would just waste all the income money, which it might be true.
Point. Lisa, you might not be wrong there. Absolutely.
But can we try? Can we just try?
Yeah, for sure. I mean, here's the deal. In the last, in the last 5 years, I'd say, in the last 10 years, maybe even 15 years, let's do this. Let's just call it the last 30 years. We might be in the most fiscally responsible presidential administration that we've had since the Clinton era, maybe even before that. Let's give them a chance. Let's give them a chance and see. But again, Lisa, you're not wrong. They might just waste it.
We've actually been in the black, I think, the last 2 months, right?
Absolutely. Which, again, CNBC and other outlets were so disappointed to find out that we were in the black. But the tariffs, they weren't supposed to do that.
That is what Scott Bessent calls, I think it's tariff derangement syndrome. It's the new TDS. Syndrome. He says people are actually rooting for the tariffs to ruin the economy, and then they're disappointed when they don't.
Oh, man. How foolish you have to be, folks, to root against your own country just to prove a political point or to keep power. Amen. Crazy stuff. Well, Sam, let's switch gears here to this topic of conquering your fear of investing. I found this, you had seen this fascinating survey, Sam. Why don't you tell us about this?
Yeah, so this comes from a group we definitely don't like, but the stat is interesting. This is according to the World Economic Forum in 2024. They offered a survey where they found 40% of people surveyed held off on investing in the market specifically because they were afraid of losing their money. Now, this ultimately came from an article in Investopedia the other day called Conquering Your Fear of Investing. I found it very interesting, and I think they gave really good advice that we'll have to augment a little bit for the BRI perspective, but it's still really good. They quote the CEO of Elevated Accounting, who pointed out, yes, it might seem like a good idea to hold off on investing to not lose money, but there's also risk there too. There's risk with everything. They said, quote, avoiding investing feels like protection, but it's expensive. Inflation quietly eats away at savings, growth gets delayed, and you end up working harder just to maintain your money. The fear is real, but so is the cost of staying frozen. So the question now is what to do. They recommend two things, and I want your thoughts on this, Seth.
Sure.
And what maybe we should do with this from a financial issues perspective.
That's great.
So one, they say invest in index funds. They say they're well diversified. They're better insulated from dramatic market fluctuations as a result. So they take away some of that fear. Plus, they do a lot of hand holding. You don't have to invest in individual equities. The problem from our perspective is they're not BRI. Yeah. So we might suggest something like Timothy Plan as an alternative there. The idea is still very good.
Yeah. And Sam, I'll just add to that also, for those of you folks who are looking for some more hand holding, one of our two models is entirely based on funds. So we have the fund model, we have the regular model. If you need a little more hand holding, that fund model is definitely going to be the way to go for you. So that general point, Sam, is exactly right, is investing in those funds, just making sure they're biblically responsible.
Yes, exactly. But the principle is still there. If you're kind of wigged out by the market and you're getting started, try some ETFs, some mutual funds, particularly with the Timothy Plan and for being biblically responsible.
Sam, I feel comfortable sharing this on the air. That's how you and I both started.
Exactly.
That's how you and I both started. And so it's good
actually
stuff.
Both of these things, not the index funds, but investing in these larger scale things like mutual funds through Timothy is exactly what I did, because it is overwhelming at the beginning for sure, and you're scared. You don't know if you know what you're doing, but this is how you get your feet wet and you figure out how to actually do this stuff. The second thing they recommended, this is something Shanna talks about quite a bit, is starting small. They say deploying small amounts of money on a regular basis, also known as dollar cost averaging. You're getting the average of the highs and lows. They say this is going to build your confidence and establish investing discipline. Also, it's less nerve-wracking, of course, than just dumping all the money you have in the market at one time. So what do you think of those two, Seth?
I think it's right on, Sam. I think it's really, really good. That first step, once again, with the biblically responsible lens on it, I think is fantastic. And then that second one, you're talking about starting small and deploying small amounts of money. Dan used to talk about this all the time, Sam, that there's this habit that you get into where even if you if you're just doing $5 a month, that's nothing. That's like pennies. But you're building the habit of putting something away. And then you can start to grow that. You realize, okay, you know what? I didn't really miss that. I can do $10 a month. I can do 20. I can do 30. I can do 50. Then that starts to become, okay, now you're seriously getting into it. That's how you start. It's like with any type of habit. You start small, you learn small, and you start to grow it. I think that's fantastic. So what I'd love to do here, Sam, is actually hear from both you and the chat. I had asked this at the top of the bottom of that last segment there. What were some of your greatest fears before you started investing? Your fears of investing, and how did you overcome those? Sam, why don't you go first? I'd love to hear yours.
Yeah, I don't know if I had an explicit fear of losing my money. I knew how the stock market worked, that if you stay in long term, you're pretty sure you're going to get some gains there. So I wasn't really concerned about that. I was more concerned about the technical element of actually going in and setting up an account and figuring out how it worked and getting that muscle memory in there of doing. I was afraid it would become, too overwhelming for me, and I would just bottom out, forget to do it, and it would just be a big waste of time, and maybe I wouldn't get out at the right time because of that, and I'd just waste my money and then I guess lose all my money in the process. So I think it was way more, it just seemed too complicated for me. The way I fixed that was by following these two things through the financial issues model. I started with things like the Timothy funds because they're very easy to invest in. I know they're doing a lot of the work, and that taught me how to do it, how to use a brokerage account and things like that to get that groove going. And then I slowly diversified out into individual equities, and now I'm off to the races, and it all seems very easy to do, which is why I recommend people just start small, because then they learn that they can do it.
Absolutely. And folks, you don't have to start with you can jump right into investing yourself, not using mutual funds, but we're just putting that forth as that's our experience, and that was a great way to kind of get it started too. But it's really up to you. Sam, I would agree with you. Yours are pretty much the same as mine. I think the fear of losing money was probably a little bit more prominent for me, just because I didn't really even think much about investing seriously until I already had a wife and kids. And so at that point, I'm thinking, okay, I need to provide for them. I want all my income to be able to provide for them. But when I started to think, wait a second, I need to not just provide for them in the present, but in the future also. That's really what kind of got me over that hump too. And I think what you said as well, the fear of doing it wrong, that's a big fear. That's a really big fear. And so that was a tough one for me, but it was just getting over it. It was just saying, you know what, I'm going to try this. I'm not an expert at it. I'm going to give it a shot. I'm going to see what happens. And it really has brought tremendous comfort to do it with the financial issues model. It's just been amazing.
And you'd be amazed how quickly, once you just try it, you get that groove. And I've been doing it for years now, and I feel pretty confident in what I'm doing. And I'm confident in the strategy itself, because I've seen how it works, and I've seen that it actually does wield results.
Exactly. Yeah, so chat, share with us some of those fears you had before you started and how you overcame those. And later on in the program, we'll get to those. Let me give you some thoughts, folks, for those of you who are on the sidelines. And I get much of our audience is not. Much of you are already in. But there are some who are on the sidelines. I just want you to consider, as you're considering the risk of investing, please consider also the risk of not investing. That article mentioned inflation. Inflation is a slow, silent killer. If you've got money parked away, even if it's in a fireproof box under your mattress, as safe as can possibly be, there's still somewhat of a risk there. There's the risk of fire and theft, but there's also the inflation risk that you are slowly losing the purchasing power of that money. It's not going to happen quickly, but it's slowly happening over time. And speaking of time, that's another one also. The sooner you start, the better chance you have to be able to grow your money. The sooner the better. The more you wait, the tougher it's going to be. I'm not saying it's impossible. We've had people, ask on this show, I've never invested before. I'm in my 40s or 50s or 60s. You can still do it. You can still do a great job, but you have to work harder. You have to put more away. I also keep thinking as well about my own children. I just want so badly to be able to have something to give them when they get to my age, some way to help them. If I can, if I just hoard what I have right now, the money that I save for them 25 years from now, when I have to pay for Eloise's wedding, or I want to be able to give, Eloise, Josiah, and Knox a down payment on a house or something like that, money for that, be able to bless them with that. Those are just ideas. I'm not sure if we're going to do that or not, but things that I'd love to do. I probably won't have the money that I could potentially have if I'm putting it to work now. And so that's so important, folks. And for those of you who are fearful, it's just time to take the chance. If you need some hand-holding, we have that fund model. But don't forget that there's an opportunity for you to try it yourself with the regular model also. It's great. It's built so that normal, everyday Joes like you and me can do it and can do it well. You can actually do it. And I think the last thing that I just encourage you all to consider here is one of the most important parables from our Lord's lips. This comes from Matthew 25. This is kind of one of those, I'd call it a bedrock verse for our ministry here. Matthew 25 is the parable of the talents. And if you remember, there's three servants that are mentioned in this. There's the first two who take the master's money, what he gives them, and they use it well and they make more money and the master's pleased. There's the third servant who is afraid and he hides it. And here's what the master says to him. He says, "You wicked and lazy servant, you knew that I reap where I've sown and gather where I've not scattered seed. So you ought to have deposited my money in the bankers, and at my coming I would have received it back my own with interest. So take the talent from him and give it to him who has 10 talents. For to everyone who has, more will be given, and he will have abundance. But from him who does not have, even what he has will be taken away. And cast the unprofitable servant into outer darkness, where there will be weeping and gnashing of teeth." I don't want us to be like the wicked and lazy servant. Keep in mind, he was cast into hell. Okay, he was cast into outer darkness. Now, he was not cast into hell because he didn't invest well. He was cast into hell in this parable because he didn't love his master. What he did with the master's money, or what he didn't do really, was indicative or evidence of the fact that he actually had no love in his heart for the master. His heart did not belong to his master. That's why he was sent into outer darkness. Let's love our master, folks. Let's make much of what he's given to us. Let's put it to work and trust that if we do it faithfully and, most importantly, obediently, keeping it out of the hands of wicked companies, that God's going to bless us with that, and he's going to remember that. This is not to earn salvation, folks. This is an outworking of the fact that we have been saved, and we want to make much of what God has given to us. Hope that can be helpful for you, folks. We have this Bob Barber segment coming up next year. I got to sit down with Bob and talk a little bit about an orderly financial household. At the end of it, I'll come back in and we'll wrap up the show together.
In a world where financial decisions can feel overwhelming, it's easy to lose sight of what truly matters. But what if there is a way to align your financial goals with your deepest values? Financial Issues has helped us navigate the complex world of finance through a biblical lens. By prioritizing and investing in a way that honors God, Financial Issues has empowered us to focus on what truly matters: our family, our faith, and our future. With Financial Issues by our side, we can invest knowing that our financial decisions are in line with our values. Take the first step today and become a Financial Issues partner to access rich online resources, training tools, and guidance for biblically responsible investing. Head over to financialissues.org and learn how to invest your money in a way that honors God. That's financialissues.org.
Make a point. No matter what happens, I'll always be there for you.
I know.
You know, folks, it's always a treat for me to be able to welcome on voices who are truly experts in their field to the show, and for them to be able to share their wisdom and insight with you. And I've got one of those with me now. My friend Bob Barber. Bob is a financial expert. He's a godly Christian man, more than 30 years of helping individuals and businesses invest well, doing it all for the glory of God. Bob, welcome back, brother. I'm thrilled to have you today.
Thank you, Seth. Those are such kind words that I feel undeserving of, but thank you very much.
Yes, sir. It's a delight to get to have you. And Bob, I'm excited for today's topic. We're going to look at an important one. Some of the defining characteristics of an orderly financial household. Now, an orderly household in general is obviously a very good thing. It's a gift of God. I do believe that that is the calling of every man and, you know, of course, every married couple. And part of that is having an orderly financial household. So it's something that you've talked about before, the importance of having one of these. Let me ask you this to start, Bob. What are some key differences between a household that's financially in order and one that's in financial chaos?
Oh, wow. There's a lot of things there, but I'll try to highlight on 3 or 4 of them.
Sure.
One is knowing where your money is going, and on a daily and a weekly basis. I'm probably a fanatic at this. I go online every single day to see where everything is being spent. But you know, this is not my money. I'm a manager. I'm a steward of it. It belongs to God. So I want to make sure that it's being spent in a way that is wise and not wasteful. When you know where your money is going, and you have some margin in there, you know, emergency cash reserve is so important. I've seen so many families hurt by not having emergency cash reserves for when that water heater breaks, or there's a health issue that comes along, or a job is lost. And, you know, there's different philosophies on this about how many months of cash reserves should you have. And I believe it's somewhere between 3 and 9 months of cash reserves. I've seen this in my own life. It's been 8 years now this year that when my wife got cancer, and I wanted to spend every moment with her while she was going through that therapy. I will say this, we're 7 years past, and she's cancer free.
Praise
so
God,
we're
man.
really excited. And, you know, we were
That's
very
awesome.
fortunate to be one of the fortunate ones that everything worked. And she's still with me today. My wife, and we've been married 41 years this year. But
Congratulations, brother. That's
those
awesome.
emergency cash reserves. Thank you. Those emergency cash reserves served us so well when we had that it wasn't a stressful time, because you know, with cancer, it was so stressful in the first place. I mean, we were at MD Anderson in Houston, and that was a very, very stressful time, but I didn't have that financial stress behind that. Another area I see is not having high interest consumer debt on depreciating assets. Assets like, you know, consumer debt. I'm not totally against wise debt, and I know we'll cover that later. But having debt on depreciating assets, you've got the interest plus it's depreciating at the same time, like a vehicle or any, you know, debt on furniture or anything else. You just think about it, you're going backwards twice. It's depreciating and you're having to pay interest on it.
Bob, that's so simple. I'm so glad that you mentioned those things there. Really, what it kind of summarizes for me in my mind is, you know where your money's going, meaning you're using common sense. You said it exactly right. This is not actually our money. It's God's money, which means that should be all the more reason why we should know where it's going. If it was just my money, that's important enough, but it's God's money that he's entrusted to us. That means we really have to know where it's going. And we're talking every single cent. And then having that emergency cash reserves, and also not having the high interest consumer debt on depreciating assets, what that brings to mind for me, brother, simply is being able to live within your means and to purchase things when you have the money to purchase them. And I totally agree with you. There's a way to use and utilize debt well, which we'll get to in like a little bit, but it really starts with that mindset of spending what you have on what you can afford. Am I correct in that?
You're absolutely correct in that. And, you know, I made a program. It's really an interesting title. I don't know, it was about a year and a half ago. And it was a pretty popular program we made on our podcast called Budgeting Without Numbers. And you're like, okay, how do you do that? Because some people just hate numbers. If I want to get in an argument with my wife, I start getting into the numbers. Okay? You know, we've been married 41 years, but if I want to argue about anything, so what we do is we live on the same amount every month, every week, and we have a certain amount that comes into our account. And if that's gone within 3 days, there's no more spending. You have to wait another 4 days before you can spend anymore.
Bob, that's great stuff there. Let's shift gears now to, I think, one of the most important things that a financially orderly household does, which is tithing. Why is tithing so foundational for a Christian orderly financial household?
Well, as we know in Malachi 3:10-11, it's the one place in the Bible where God says you can test him. Did you realize that?
It's pretty fascinating, isn't it?
Yeah. You know, it's bring the whole tithe into the storehouse, that there may be food in my house. Test me in this, says the Lord God Almighty, and see if I will not throw open the floodgates of heaven and pour out so much blessing there would not be enough room for it. And then the second part of this is really important. I will prevent pests from devouring your crops, and the vines in your fields will not drop their fruit before it is ripe. Take that to today. I've seen examples of people tithing over and over. Their vehicles don't break down as much. The water heater continues to go farther. The air conditioning doesn't break down as much. It is amazing to see that foundation of when you're tithing, God's true to his word, and you can test him because it says you can. It's the only place in the Bible it says we can test him. Go read it, find for yourselves. And then when you start tithing, watch what happens. You'll be amazed at how you more and more have the ability to give more and more and more. And some people will say, well, I don't have anything right now. I don't have any extra. Just start with a little bit. Start with $20 a week. And then that turns into $80 a month. And then $25 a week turns into $100. Before you know it, you'll be amazed at how much, you know, if you make $100,000 a year, you're giving away $10,000. That's just the base. And you're getting up to where you're giving away maybe $15,000 or $20,000. And you're like, how did this happen? Because you started small, you trusted God, and you went into it, and you're showing more and more your faith. And that is such the basis for a good financial household.
That's so well said, brother. And you know, it's not the prosperity gospel, folks. It's really not. There's a simple law at play here, Bob, which is that if we are faithful, God will bless us. And you know, sometimes the blessing's financial, sometimes it's spiritual, sometimes it's both of those things. Oftentimes it's going to just be in eternity. Sometimes it'll be here as well, though. It's up to God to do that. He's the one who gives it to us. I love that reminder that you gave us, though. That's the one place we can test the Lord in. It's so fascinating. So many Christians don't. So many Christians are afraid to test the Lord in that area, even though he tells us to do so. And then to just watch that those blessings pour out, just are so appreciative of that, brother. So in addition to tithing, what else should Christians prioritize if they want to honor God with their finances and build stability for their families?
What should a Christian prioritize to honor with their finances? That was your question,
yes,
right?
Sir. Yep. Okay.
All right. Well, besides the tithing, and you know, have you ever heard the term there's tithing and then there's giving?
Yes, sir.
And so beyond the tithe to your church becomes giving to different ministries. And I think it's very important that your children see you giving. By the way, I think churches need to bring back the offering plate to their church. I go to a church and I just sent an email into my pastor. We need to bring the offering plate back. Don't take away that blessing. And beyond that tithing, it becomes a realization that God owns it all and that we're stewards and managers of it. And we need to be careful about holding on too tightly. We got to hold on loosely. You know, if I put my hand up here and you can see it, and my knuckles get real white if I put my hand together really, really tight. But when I open up and say, God, you own it, it belongs to you, then God can start using that, and all of our finances become glorifying to him versus glorifying to ourselves.
It's great stuff there, brother. We're at that point right now in this segment where we might need to transition for just a moment because we're coming to the end of it here, Bob. Okay. But, I really do love what you have, said there, brother. And folks, I can't encourage you enough that section that Bob was referring to, Malachi chapter 3, verses 10 through 11, give that a try. So many of us are fearful, myself included, Bob. I've had seasons of my life where I've been afraid to tithe because I'm afraid of losing the money. Maybe the checking account's a little bit low for that month, and I'm like, okay, here goes nothing. I'm not sure what I'll have left here. And I can attest to exactly what you said. The more I tithe, the more it seems like God blesses us. And again, whether it's financial or otherwise, I begin to feel and notice those blessings. And that's just the truth of Malachi 3:10 playing out in my own life. So I cannot encourage you folks enough. Please consider doing that. Bob, coming back on the other side of this break, we'll continue this conversation. Folks, I hope you'll stick with us there. We've got more financial issues coming up here. Bob Barber is going to share some more of his wisdom with us. I'm looking forward to it. We'll be right back after this break. Stick with us.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
If a woman sees her baby on ultrasound, it doubles the likelihood that she'll choose life. On top of that, we share the gospel of Jesus Christ with her. This is why you should support preborn.
Then they sat me down. If you were to die today, do you think you would go to heaven? And I was like, no. Keeping the child was my first stepping stone. And ever since then, God has cleaned me up from the inside out.
Help support women in need. Go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Folks, I'm really enjoying my conversation with Bob Barber here. I hope you are as well. Again, Bob, great Christian brother, financial expert, decades of helping individuals and businesses invest well, and it's an honor to have him with me on the show. Bob, when we started this interview in the last segment, you had mentioned really kind of three keys of a household that's in order versus one that is not. Can you remind our listeners what these three financial keys are?
Sure thing. It's emergency cash reserves, and I think that needs to be about 3 to 6 months, knowing where your money is going, and we're going to talk about that, and then no high interest consumer debt on depreciating assets. Yeah,
so let's jump off of that second one there, knowing where your money is going. This is that that wonderful B word that so many people don't like, budgeting. It's a topic people either love it or they avoid it. Bob, from what you said, It sounds like you're someone who probably enjoys budgeting. I was not always that way, but as I started working here at Financial Issues and started paying attention a little more to my money, I found that I actually really started to enjoy it a lot too, which is pretty interesting. Can someone really succeed financially without a budget? And how important is having a budget and sticking to it?
That's a really good question. And like I've mentioned in that first segment, opposites attract. And if I want to get in trouble, I start mentioning the budgeting word to my wife. But we've learned from being married for 41 years that we've got a budget, but the way that it works for her versus for me, I'm the detailed guy. I want to see where everything is going. But what works so much better for her in the way that we set up our budget is at the beginning of the month, we pay our essentials, our food, shelter, and clothing and utilities. We set up for the essentials, and that's the main bills of the month. And then we realize the next 3 weeks, we've got a certain amount that we're going to spend per week. So it doesn't matter what we make. By the way, we've lived on the same amount for nearly 15 years per year. Doesn't matter what I make.
That's amazing.
If I earn much more, we still live on the same amount.
Talk about living within your means, brother. I mean, that's really good. That's really good.
Yeah. So week 2, week 3, week 4, we put a certain amount in our account, and that may be, for some people, it may be $1,000 a week. That may be $2,000 a week. It depends on what you're making on an annual basis and a monthly and a weekly basis. But when you put that amount in your account and you only use debit cards, credit card companies want you to be in debt, and they're always going to raise the limit. But a debit card is coming right out of your account, and then you can go monitor that. If you don't like budgeting with numbers or budgeting without numbers per se, all you got to do is go into the app, and most banks and credit unions have an app, and that's exactly what my wife does. And we're going on to our app every day and looking at that. And we know if we spend it all in day 3, we've got to wait 4 more days because that transfer is not going to take place for another 4 days. So we separate our money, savings, and then our spending account.
And Bob, for folks like us who might get a little more excited about the specific numbers, you had mentioned opposites attract. How do maybe the savers interact well with their spender spouse and vice versa? How do we show grace to each other? I know this is getting a little bit into the topic of marriage, but finances are so important when it comes to a healthy marriage. Well, what would you say to that?
There's 4 personality types. There's the giver, the spender, the saver, the investor, and you can probably guess which one I am. I'm the investor. But my wife is the giver, and she'll spend. She doesn't matter. I mean, she wants to give to everyone, and she can now spend too much giving. I don't think you can do that.
Yeah.
But I'm like, you spend that much, and because I want to invest, and when I do give, I like to see that it's spent well with whatever organization I give to, and of course, then there's my church. I don't know if I covered your question though. I got off on that. I went kind of off on a rabbit trail. What was that question again?
Yeah, just more how do each of those different categories relate well with each other? So for example, you more the investor, how do you show grace and come alongside and work with your giver wife? And the same thing for the givers to the investors, or for the the savers to the spenders. How do they work well together?
Look at the body of Christ.
Yeah.
Where's it in Ephesians? It talks about how we have all the different members. Not all of us are teachers. And so you've got it. There's going to be the pastor up at the front. There's going to be somebody in the back that's handing out the bulletins. There's going to be somebody setting up the chairs. There's going to be somebody in the kitchen cooking. All of us have different gifts, and we have to understand that those gifts. So I don't put down my wife for not liking to budget, and that because God's given her that heart for giving, and I think we just got to work with each other, and that's got to be in prayer, and you got to look to Scripture and how we have different strengths and weaknesses.
Love that, Bob. Let's move now to a topic that we've mentioned, that credit, debt, all that stuff there. A lot of people saying avoid it completely. A lot of others saying it can be a tool. Where do you land on Christians utilizing debt well? Should we just avoid it? Borrower slave to the lender? Are there some areas of debt that we can use well? How would you answer that?
Well, you're right. What you just mentioned, you mentioned from Proverbs 22:7, which is the rich rule of the poor and the borrower's servant to the lender. Yeah. And there's a second part of that too, 26 through 27. Do not one who strikes hands and pledge, because if you don't have the means to pay, your very bed will be snatched out from under you. So I'm not against the use of debt as an example in buying a home. Most people, especially those in their 30s, and homes here in Texas can easily run $400,000 and $500,000. Probably the same thing up there, or maybe more. Yes, I mean, there's parts in California where you're running $1 million or so, and you just don't have that much money saved up. And borrowing to buy that may be okay, but if you're, and I think borrowing money for an appreciating asset, which real estate appreciates over time, is okay, as long as you're going into it with lots of equity as well, so that you're not right up against the wall if something goes wrong and you have emergency reserves. So before you go in and borrow a lot of money, you need to have savings and emergency reserves. And I really, like I said, I'm totally against borrowing for anything that's a depreciating asset, because now you're paying interest on it. Plus it's depreciating at the same time. It's like a double whammy, as the old saying would go.
Well, folks, hope you enjoyed that conversation with Bob. Always a pleasure to have him on. Hey, Sam, let's get back to what we were talking about in the first part of the show and get to some of these chat comments here as people are sharing some of their experiences about, how they had those fears with investing, how they overcame them. This first one from Bert is really good, Sam. Why don't you read Bert's for us? Bert from South Carolina.
Hang on, I'll have Bert up at just a moment. If you could read it just for a second.
Yeah, absolutely. Bert in South Carolina is saying, my father scared the daylights out of me. He loves to invest in stocks and did make some money. He invested in Apple, made some great money, but he lost as much in other stocks. It was his worrying about the market that drove me into mutual funds. Thanks for helping us. Bert, I appreciate you sharing that, man. And I feel sad for you that you had that example from your dad, but also so grateful that really kind of formulated your investing model there. I mean, you were able to find a home in mutual funds. And so obviously, if you're following the FISM strategy, that means you're investing in those Timothy funds, which I'm in those as well. And I just can't say enough about them. I'm so grateful to be able to be in those. But man, that is just such a good reminder and a lesson. First of all, folks, of this idea of emotional investing.
That's exactly what I was going to say. Tough, it sounds like if he's really worrying about the market, and that's what's causing him to make some of these decisions. The other question is, what's his strategy? Did he have one, or was that also based on emotion, which it sounds like it might be?
Absolutely. And then secondly, too, this is so important. We talk about this a lot on the show. How are you stewarding the next generation? Are you instilling them with fear, which, Bert, it sounds like what you shared here is kind of what you got from your dad, or are you instilling them with courage? Are you telling them, listen, son, daughter, you have been given the Spirit of God to be able to do this well. You can do it. You can be part of the generation that turns this stuff around, and that includes your money. That also includes every other area of life as well, though, folks. This is something we've been talking about a lot on Bible study, is I'm so fed up and frustrated with across a lot of evangelical Christianity. Not everybody, but a lot of people have a very pessimistic, negative view of the future, where they're just kind of waiting. They're waiting for the rapture. They're hiding in the corner. If you read the New Testament, you realize that is not what God called us to do. He called us to take the kingdom. He called us to conquer, to move forward, to make a difference. That's why we do biblically responsible investing. If we're just sitting around waiting, we're wasting our time doing BRI. We're wasting our time supporting preborn. We're wasting our time giving to church. We need to believe that things can get better, that the kingdom of God is growing and it's moving. And that's so important when we talk about our investments. Bert, I apologize for getting on that rant there, but I really appreciate you sharing that with us. And again, so grateful for you.
No, but it's so true. Is God calls us to hope, and hope into the future. So it's one of the first things that he commands: add, fruitful, and multiply. That is a look into the future, to do something, to look at something beyond what's happening right now and imagine something even better than than what's currently happening.
So important. And folks, a way that you can do that so well is with your money. It's setting up your heirs to be able to continue on, to be able to do that well. So yeah, sorry for getting on that tangent there, but I think it's so important. Nelson saying, took me 6 years to migrate my 401k to the IRA and build the BRI portfolio. Made quite a few mistakes along the way. Nelson, I appreciate you sharing that with us, brother, but it sounds like
Nelson is the best. I bet he made very few mistakes.
Absolutely. And you've learned from them and you've overcome them, man. That's awesome. And George's been doing this for over 25 years with Dan, now with Shanna, 12 to 15 years ago with us. Man, that's so cool, George. Thanks for sharing that. Well, folks, it's been a great time together. God willing, we'll do it again tomorrow. Until then, remember, it's all His. Let's be found good and faithful stewards with what God has given to us. See you next time.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.